Start. Welcome everyone and thank you for joining today's Seasonax webinar. Originally, we had planned for both our co-founders Dimitri Speck and Christoph Zenk to lead today's session. Unfortunately, Dimitri is not available due to illness, which is why Christoph will lead both webinar areas today. This webinar is divided into two chapters. The first one is a theoretical part and explains the basics of seasonality, where the second one will present two specific examples on how to use Seasonax. The first use case in the app involves the seasonal analysis of a single stock. The second one identifies a single stock that has an interesting upcoming seasonal pattern. As always, we welcome questions, and if there's enough time, we will already answer them at the end of the session. I hope you enjoy it, and I'll hand over to you, Christoph.
Thank you, Manuel. Well, welcome everybody, and welcome to this first session of this year, I think, so far. As already mentioned by Manuel, I will take over the part of Dimitri, who's unfortunately ill. And as some of you might know him already, he's one of the co-founders of Seasonax. He is the brain behind the seasonality algorithms, which we are using in Seasonax. And I would like to start in general with the first slide to help you finding out how to unlock the power of seasonality in trading. We have two sessions, as Manuel has already described. The first one is more theoretically, and the second part will be a practical session around how to apply that knowledge within Seasonax and use it in our platform. Both sessions can be viewed divided, of course, and we will record everybody and everything and send the video out by tomorrow. I hope there are insightful new features and informations for you, and I will directly start with why we are existing, because we are here to try to solve a problem. And this problem is mainly that traders are always looking for, most of them I would say, trying to optimize their trading. And of course, they want to sustainably improve their profits while at the same time reduce their risk. And I think that's something where we started thinking about how can we support them. And of course, seasonality is something we can use and apply for this. In the best case scenario, I guess everybody of you has this very unique workflow already. And that's why we try to give you a tool which you can use on your existing workflows, of course. And the second thing is, in trading, it's a lot about time and timing, and you don't want to spend too much time on analysis. That's why we came up with an idea how we can support you, in our case, with seasonality. Now, what can seasonality offer you in general? Because seasonality is something which helps you because it is statistically based. There are no emotions involved, and you can apply it to almost every existing workflow which you already have. For example, you already have your one and only approach, how you would pick single stocks or assets in general, and you would trade them. And what you can use seasonality for is, you can use it as your standalone trading strategy, which means you can directly go for seasonality only and apply it, pick stocks based on the seasonality and trade them, which is one approach which some people might use. And there's another approach. You could use it as an overlay, for example, for your already existing workflows or strategies you have. The idea behind it is an additional decision-making tool. It can help you, and you can apply it however you would like to. And the third way you can maybe use seasonality generally is pre-screening based on a seasonality. This is a very special use case we will try to cover in the session 2. It will help you to, for example, pick 20 stocks which are interesting for a seasonal approach. And then you can use those 20 as your short list and apply your analysis based on that, which probably will save you time in general. Now, what's the definition of seasonality? We would say market seasonality describes the tendency of financial markets to show predictable patterns or trends at certain times of the year. Or in other words, we try to find repeating patterns which do have a reason for that. Which means if there is a pattern which can be applied or can be found every single year, 8 times, 9 times, 10 times out of 10 for a specific pattern, that makes sense, of course, to go and search for those. The second thing is if there's a real reason behind it. Could it be weather? Is it some other trends? Or is it some other time of the year where that asset is affected? that is something which, of course, makes the pattern even stronger. So like finding a real reason behind a pattern is something you would always look for example. Now, there are a wide range of seasonality in cycles in the market, of course. And on the one hand side, some of you might don't know where those seasonalities can be found, and they do occur not only in one specific instrument or something like that. They do exist in indices, for example. They do happen to work out in stocks, in currencies, commodities, bonds, or even crypto, for example. So you do find them almost everywhere. And the second thing is, what kind of seasonalities are we talking about? There are different ways of finding those, of course, and the most known in first step are annual seasonalities, which means patterns which happen to be at the same time of the year every single year, for example. But there do exist seasonalities within a monthly period or a weekly period, and there can be intraday patterns too, which can be identified. The fifth thing which we are pointing out here are event-based happenings. For example, FOMC meetings or presidential elections are events which happen somewhere over time, but around those events, there can be seasonalities, again, which means recurring patterns. Today, we will most of the time focus on annual seasonality because in the most cases, that's where you would start off from. One thing some of you might already know, which is broadly known, is sell in May and go away. Like everybody knows that term for some reason, but what's behind of that? What you're seeing here on this slide is the Dow Jones for the last 100 years. And as you see here outlined, the sell in May and go away pattern is known since the early 30s. And the interesting thing about that is if seasonalities do happen, you would probably think that they disappear over time. But this is an example for them still existing. And on the right-hand side in the chart, you would see how your cumulative performance would have looked like if we were invested in the Dow Jones in the red line from May to October only, and then compared if we were invested from November to April. And what you directly see here is that in the 100 years, there's a 9,000% difference in the cumulative performance if you only pick one of those. So of course, November to April is way better performing than May to October. And that is outlining the sell in May and go away effect. Now, 100 years is a long time, of course. But for example, if we switch to the last 30 years in that case, what you would see here is, again, the Dow Jones on the right-hand side, red line, May to October, blue line, November to April. And in that case, for example, November to April, that pattern outperformed the May to October pattern with 550% of the cumulative performance. Now, Dow Jones is one thing, and I know there's lots of Germans watching us here tonight, even though we are going for English. Sorry for that. How does it look like if we, for example, go for the DAX? Sell in May and go away is not only broadly known, but it can be applied on different asset classes too, or instruments, for example. On the right-hand side, for Germany in that case, you would see the DAX performance, and you would see that, again, the red line, summer, May to October, there would be a really bad performance. But if you would pick or go for the November to April pattern, you would directly see that that time period is way more effective for you and, of course, more profitable. So sell in May and go away, broadly known, does still work out today and is something where you can start off from. But this is just the one thing most of the people know. Of course, seasonality is way more than just a sell in May and go away saying. Now, if we talk about seasonality in general, there is always the question like, how good can it be used? Are there different approaches of trading? Of course there are. But if we go for a white paper which was released in 2019, there were 24 global factors tested against each other. And back then it was 2019, as I said before, seasonality turned out to be, from academical view, the most interesting multi-asset strategy for your portfolio. So like seasonality is proven for being valid and can be used. And this is just like a proof for knowing, like an evidence for how seasonality worked out in the past, for example, compared to other strategies. Now, that was just like mainly talking about general information about seasonality, but how do we generate a seasonality chart, or how does it look like, for example? Now, basically, a seasonal chart displays the movement of a price on average over the year, which means I would take the historical data from an asset, let's say the last 30 years, for example, and out of that, based on algorithms, we would create a seasonal chart. On the left-hand side, you would just see different input. On the right-hand side, you would see how a seasonal chart would look like. And the important part about that is it's not a price chart. If you see a seasonal chart, whether it's on our application, on the website, or somewhere else, it would always start at 100% and show you how the price would move on average over time. Now, on the right-hand side, you would see a yearly annual seasonality chart, and you would see highlighted areas which might be more interesting because it seems like price is on average rising, falling, or rising again. And that has a specific reason in that case. As said before, a chart always starts at 100%. That's really important because the first problem people sometimes have is reading a seasonal chart. But it is based on a percentage on the left-hand side. And on the lower side, you would see, of course, over the year, starting on January until December. And on that chart, for example, if you would take a look on that, there is, for example, an interesting period from February to April, where on average the price did rise. Then there's a not so interesting part over the year, which is from April to September, where the price is going like a horizontal movement or even downside. And then again, for some reason, again, there's a year-end rally. The year-end rally is known, of course. It has effect on lots of assets, and in that case, you would directly see in this special chart, February to May, interesting investment period. October to December, a second interesting investment period. Now, this is theoretically. If we would now jump over to a chart from Seasonax, in that case, you do see the S&P 500 over the last 25 years. You would again see that seasonal chart, which starts at 100%, and you see the movement over time. And as you would see here again, it seems like March and April has a strong rise of the S&P 500. And again, there seems to be a movement from October to December, which is known for the fall in that case. A seasonal chart can be used as a signal input, which means as the S&P 500 pops up here in March, it would be interesting to invest into the S&P 500, probably statistically based again in March. And it would be interesting to be starting investing in October. But probably it makes sense to, if you want to sell end of the year, or maybe sell early May, because at that period you already have the most interesting part covered, and that pattern could optimize your trading profit, for example. Now, where do those seasonal patterns come from? There can be different reasons, and lots of different reasons which can be applied to different assets. One, of course, is natural events. It could be weather, it's heating, it could be harvesting time, for example. Around those dates, some asset classes are influenced, of course, and result in movements of the price. There could be seasonal patterns which are affected by taxes or fiscal deadlines, for example. Reports are mainly something which do affect assets mainly. And there can be emotional phases, for example, for Christmas. End of the year, as you may know, some of the stocks do really rise, and it is probably sometimes an emotional time. It's the end of the year, and that is a trend which you can see in lots of assets. Other influences could be extracted materials, for example, for a special season. And of course, there can be industrial fairs. So what you always look for are real reasons which do affect certain asset classes, and those are patterns which you try to find and use for your trading. Now, there is a second effect which happens for seasonality, and that's very special events, like, for example, central banking actions like the FOMC meeting. It takes place 8 times over the year, and whatever you do, you always have to have an eye on those events because they do have effects on certain assets too. Same goes for elections or, for example, for future expiries. Of course, reports, and there is even a seasonal effect, which is the turn of the month, mainly because people do spend more money maybe at the end of the month if their bank account allows it, or at the early beginning of a month. And that has an effect too, of course, for revenues which can be done, for example, in the markets. So seasonal patterns do happen. There is a reason behind it, and there are special events which do affect those seasonal effects too. Some years, of course, don't follow the seasonality. Like as I said before, there are patterns. They do happen, for example, 8 out of 10 times, but there are certain years where they don't happen. The example which you see here again is the S&P 500. In that case, with a date range of 70 years, and what you see marked here is a pattern which is the end of the year rally. Now, out of 70 years, in 54 times, that pattern worked out. It's like that there was a profit in an increase in this 15th to 30th December every year, but in 16 times it didn't. So seasonality is no guarantee, but it gives you a statistical advantage, which means you always have to have an eye on the market. But of course, it makes sense to learn from the past. In our case, we use historical data, we create a seasonal chart on it, and you can use that information and then combine it with your market knowledge, for example. As you might know, or like if what you should know is that patterns can change over time, of course. Like they do change, which means if you go for looking for seasonal patterns, you always have to keep in your head that, of course, over time they're changing. If we're going for the Dow Jones on the left-hand side from 1984 to 2004, you do see that it starts at 100%. There's a slightly movement. Then from March to April, you do see the Dow Jones rising, going sideways, rising, going sideways, and then having the end year rally again, or the fall rally in that case. But from 2004 to 2024, you do see that the seasonal charts do change. And at that point, if we are looking for the last 20 years now, the Dow Jones seems to be interesting from early November, end of the year, until the next year, May. And then again, summer break, where June to September isn't that interesting anymore. So as what you would see here is if you're comparing seasonal charts, of course, over time they would change. And you always have to have an eye on the long-term statistics and maybe the short-term statistics in that case. So if we summarize seasonality in that case, what works best is, of course, finding a clear reason behind seasonality, identifying those and applying them. And you can use seasonality as a standalone analysis, for example, or you can combine it with other analytics tools or workflows which you might have. And as you should remember, there are many reasons for seasonality, such as the harvest season, the weather, elections. All of those can affect the seasonality. And of course, that makes sense for you to always think about that before you start your trades. Now, seasonality in general always gives a statistical advantage, but please always combine it with all the knowledge you already have and apply it to the market. Now, that's a very short first introduction because I want to spend more time on really applying that knowledge within Seasonax on assets of your choice, for example. And that's why I will switch over to the application and give you insights to how you can apply those and how you can use the application to really find seasonality within assets. If you are already a user of Seasonax, you might know that already. But we do use discounts for new customers, and you could use Seasonax 20 to start a subscription today or the next days, which will apply a 20% discount on your first payment, which could be 1 month or 1 year. And since I'm not much of a fan of giving discounts away just to new customers, if you are existing Seasonax customer already, you can reach out to our support, tell them that you joined the webinar, ask them to apply the discount for existing subscription, and it will be applied for the next subscription period, which you already have. Since Manuel is checking the chat in the meanwhile, and you have questions around seasonality or the app when we jump into that application now, please ask your questions, and I will try to answer them as easy and soon as possible if we have time at the end of the session. What I will do now is switching over to Seasonax itself. I know the screen looks similar to the presentation, but I'm now jumping onto the website itself. Whatever you want to find about seasonality should be covered on that website. You will find general information about seasonality, about the features of the application. And what is interesting, I guess, for most of you is that we have a research section where we do release on a bi-weekly basis researches around the market. And the last seasonal insights did go out yesterday, for example, and did cover the presidential stocks in the Trump comeback, for example. So if you're interested, go for that. You can read through the articles and the research reports covering all the information which our research team is looking for. It's for free, and you can sign up for the newsletter, of course. Now, if you're not a user yet, you can directly start a subscription or a registration on the right-hand side. And to add that, if you want to give it a try, just press the start button, type in your email address and a password. We don't need a credit card, and you have 30-day for free trialing out everything. There's no limitation, and you can give Seasonax a try with the business subscription. I will, in that case now, log into the application because of course I already have a user. And what you are seeing now is the dashboard of Seasonax. If you're a registered user, this is where your login will end up. And what you will directly see here is lots of information. On the first-hand side, of course, you can search for all the instruments available within Seasonax to do the analysis on them. We do have a screener, which I will showcase you in a few minutes. You would see interesting patterns out of the S&P 500, the HDAX, the Nikkei, Forex. You will find latest news, which are coming from our YouTube channel, where we would release 2 or 3 times a week interesting trading ideas around seasonality covered by Giles. You would find seasonal insights, which I already mentioned before, and you would find featured patterns, which are handpicked by our research team and which we constantly publish to give you interesting ideas for your trading, for example. The other thing which you might find is on the right-hand side, if you started, you have a 30 days free trial. If you would like to apply a discount and start a real subscription, you could type in Seasonax20 as your coupon code. You would get applied a 20% discount, and you could directly start a basic or professional subscription. You could always choose, do you want to pay once for a yearly subscription or for a monthly subscription? The discount is always applied on the first payment cycle, which means those 20% can be applied to a year subscription or to a monthly subscription. And the same goes for professional. There are differences, of course, between basic and professional. Give it a try in the first month, and you can then decide which direction you want to go. 29 days or 30 days in that case, with all the features you can think of. Now, what we did describe before we started that webinar is I want to really use 2 use cases, which might be interesting for you as a first-time user or even an existing user. If you are jumping into Seasonax and you maybe are interested in a single stock which you read about and you want to figure out if from the seasonality perspective, there's good timing for picking that stock, there's one approach. You would go into the search, you would type in your favorite instrument. It could be a stock, could be a commodity, could be currencies, whatsoever. I will go for one of my favorites, which is Adidas, because I love the shoes, and of course the stock itself. Now, I would type in Adidas. You do see it's popping up. It's 20 years of information, of historical data. It's traded in that case on etc. And if I click on that asset, the first thing which happens is I do see a seasonal chart. As described before in the first part of the session, a seasonal chart starts at 100%, shows you the movement over time on average, and gives you insights on the first view already on that stock. Below, you would see the average return by weekday, which means based on the last 10 years, Wednesday was the most interesting one for Adidas. And the third information which you already see is the average return by month on the right-hand side. You would already see here that January to July, for some reason, Adidas is an interesting stock. The second half of the year, not that interesting maybe. Now, what you would see here as additional information is, for example, you would see the seasonal chart is based on the last 10 years. I would now like to jump to maybe for the last 15 years. And you would see directly the chart switches and you see a seasonal chart based on the last 15 years. You would go for 25 years, for example, same goes for that. Now, what you do see here is like jumping from 10 years now to 25 years, there seems to be a pattern from early March to end of May. Now, of course, if you're talking about about statistics and average charts, a single year, of course, could affect that pattern. But what you can do in Seasonax is you can mark a certain area, release, and Seasonax will now directly calculate this pattern, like the statistics of this certain pattern. I did now mark 7th of March to the 1st of June. As you see, this area is already highlighted. And what I additionally see now is the cumulative profit of that pattern. I do see the pattern returns, which means in the last 25 years, seems like lots of the years did have a positive return. And on the right-hand side, I would do see additional information. Like, for example, the analyzed return of that pattern is 57.99%, and the winning trades percentage is 92%, which means in that case, for this certain pattern, out of the 25 years, most of them turn out to be profitable. And what you would see additionally here is that, again, this is a seasonal chart, which is a percentage. But if you want to dig deeper and see how the single years turned out, you would find that information below the chart. What you would see here is you see the starting date and the end date of the pattern in the certain year, which is, for example, 7th of March 2000 to the 1st of June 2000. That goes on until the 7th of March 2024 until the 3rd of June 2024. Why do those dates change? Of course, if that day is trading free, for example, the pattern has to change. So what we already do is we figure out when is the last trading day, and the pattern is based on that. That pattern looks pretty stable to me, but we are at the moment end of the year in November. But what I do see here is like the end of the year turns out to be pretty interesting. There are winning trades of around 76% for the trade, but honestly, if I would go for Adidas in that case, I think I would prefer to save that pattern for the future, because as soon as you discover a pattern, it makes sense to be reminded to it, or like maybe add it to your patterns. Now, what I would do for that is I did mark that area, and I would direct click on the right-hand side to bookmark this pattern, which means this is saved for me for the future. And in my pattern section, I would now find Adidas, for example. Plus, as you might see, some other patterns which are already saved. Adidas is now saved within my patterns. And if I want to be reminded on that pattern in the future, I could mark that pattern in the line I'm seeing it here with the most interesting information around it. And I could say, please add it to the calendar. Now my seasonal pattern is added to my calendar, and I have an additional view within Seasonax, which allows me to show all of that patterns which are coming up. And I could even say, notify me, and 3 days before the start or the end of the pattern, I would receive an email which would remind me on that pattern. So in the future, I shouldn't miss any of my seasonal trades, which I might found in the past. Now, what we just did is finding or like looking for a single asset, as I did before, taking a look on the seasonal chart, adapting the seasonal charts to maybe like a longer data range, marking a certain section, and then saving it for the future. This is a process which turns out to be pretty easy for users. It's always like in the first view within the chart, you already see where there's an interesting area of an instrument, or which time period might not be that interesting. Because, for example, in summer, Adidas moved from around 104% to 102%, not a really stable pattern, which means you could be invested in a single stock or indices over the whole time, or you could only pick the most interesting parts of that asset, for example. Now, jumping back to the dashboard, we did just type in a single asset and analyze it. But of course, there are lots of other informations. And what you could do is, on the first step, you could go to our featured patterns, look for any asset which is interesting for you. And what you would see here is those patterns are based on the last 10 years. So we would directly see out of 10 years, for example, Broadcom turned to be out to have a profit in 9 out of 10 times. If you would click that pattern, you would jump into the asset and the same view approaches again. So the process is always the same, and you directly see a visual feedback and then additional information which helps you to analyze the asset on itself. This is one use case I think most of the users do in the first place. But as you might saw now, is Adidas sounds to be interesting, but probably the most interesting time is in March next year. So the second approach which we do have is you could have the idea of finding an interesting asset right now for trading. And as I described in the webinar upfront, we do have the seasonality screener. Now, the screener works a little bit different. Users told us in the past, you have 25,000 plus instruments, but give me those who are interesting right now. That's why we came up with the screener. What the seasonality screener does, we did create universes, for example, for commodities, currencies. We did create US indices, European indices, and so on, which do feature all the assets which are included there. And you would directly screen based on the seasonality for the most interesting trades within that indices, for example. Now, the US is doing pretty well since the election right now, as far as I would see it until now. Now, that's why what I would do is, if I want to find an asset in the US market, in the S&P 500, I would directly jump into the seasonality screener. I could go directly via the button of the screener, or I could use this drop down, go for the US indices, and then pick the S&P 500. If I do so, Seasonax now picks all the constituents of the S&P 500, calculates which is the most interesting one right now, and creates you a list of all of those which are ranked in this list. What did you see here on the the left-hand side is the market in first place. This is the S&P 500 right now. Then you do see a state date. Now we have the 14th of November right now. I want to go for a trade for tomorrow, so I would switch to the 15th of November. And what this list means right now, it is ranked based on an analysis of all of those single instruments within the S&P for the last 10 years. I want to switch to the last 15 years, for example. So I go for an examination period of 15 years. And since I want to trade until the end of the year, I would not go for 60 to 90 days of patterns. I want to find patterns who have a length of 30 to 60 days. This means I'm picking the 30 to 60 days. And again, directly I get feedback. I have a list of the instruments, which on the first step hand, you see advanced micro devices number 1, Broadcoms number 2, and so on. And on the right-hand side, I see lots of information around that pattern. What they all have in common is they do start on the 15th of November because my start date is tomorrow, the 15th of November. The end date varies in that case, depending on how long the patterns lasts. And additionally, I have lots of information around, for example, the calendar days, max profit, the standard deviation, and so on. And I could adjust that and reduce it to less information. But honestly, most of our users do use all information available. Now, I did pick the US market. I did pick the S&P 500. I do see lots of information here now. The really easy approach now is maybe I want to reduce that. And I would say I only want to see patterns with, let's say, 85% win rate. That will reduce the S&P 500 now to 20 patterns found. And as you might see here, rank 2, the number 1 fell out of our algorithms. And the number 1 based on a win rate of 85% plus now is Broadcom. Now, Broadcom has an analyzed return for that pattern, which is the 15th of November to the 31st of December. Average return of 8.94 sounds great. Win ratio is something I did already. Sharp ratio is 3.02. And to analyze that asset now, I only have to click it. Like it's very easy to use that approach. Like what happens, I do jump into the seasonal view again. I do see the marked pattern directly, and I have all additional information which I had already before when I went for a single asset. Now, as you heard before, I do have 15th November to 31st of December. I have an average return of 8.94. It seems like in the last 15 years, or at least the last 10 years, for example, 11 gains in that case were a current streak of winning patterns. Looks good to me. So this could be an interesting opportunity. But what, of course, I would do is I would save that input and I would then apply all information around the market, around Broadcom, and then I would decide if I want to go for that trade or not. So I would always combine market with seasonality, because just to make sure, seasonality is based on the historical data, which means not only, like, of course, there is a statistical there is a statistical proof for that, but you always have to match it to the market, of course. Now, Broadcom sounds valid to me, could be a pick. But of course, I could go for example, the Charles Schwab Corporation, which would have an interesting pattern at the end of the year too. In our case, this one ended on the 26th of December, but I, of course, could still change the pattern itself. I could strengthen the length and figure out if it makes sense for me. I could change in the other direction. I could analyze the asset overall. I could maybe figure out, does it make sense to save that pattern for the next year and maybe invest into Charles Schwab already in October? Again, based on the seasonality, that could be an interesting pattern. In that case, it has a length of around 80 trading days, which is fine for me. And that's why I would add it to my patterns again. And this is how you would keep on going and pick the most interesting seasonal trades out of the S&P with the starting date of tomorrow. What we did add here is you can go for the actual the day of tomorrow, 1 week or 2 weeks. Unfortunately, we can't really allow you as a user to go for every date as you would choose, because our algorithms are recalculating all of that information every day. And to be honest, that calculations today already last for 4 hours. Now, we did go for the S&P, but at the same time, we could say we go for the US sectors S&P 500 energy only, for example. In that case, for example, no pattern with a win rate of 85% plus is found. So I would remove that. And what I would find now is that there are, of course, patterns within the energy sector, but they are not as stable or interesting as, for example, other assets. What I would see here, for example, would be Schlumberger. But that pattern, for example, is starting today and goes until the next year. So would hold it until the mid or end of January. Personally, if you are going for really stable patterns, try to find those with 70% plus, of course, but on a statistical base, everything around 50% plus already gives an advantage to everything else. Jumping back to the screen again, as we saw here in the S&P 500, for example, you might ask yourself what the rank is. Like, the rank is something we came up with. We did a mixture on lots of inputs, and this is what Dimitri came up to with. From our perspective, this is probably the best ranking which you can do on a seasonality base. But you as a user could decide, I want to prefer annualized return, or I want to prefer average return. I want to go for max profit. That's something you as a user can do. And of course, it makes sense, because what we did here is create a tool which you can apply to whatever you want to use it to. Combine it with alternative strategies, combine it with something else you come up with, or try to find something which fits you best. We did come up with the rank. I hope it helps you. And one more thing which might help you in the future, for example, is if you have that list of information, one approach could be save your CSV file of that view, keep it for yourself. And that's something I would call pre-screening when it comes to seasonality. You can choose those, you can use that list, save it for tomorrow, for example, analyze the top 5 seasonality trades, and then apply them and try to figure out what trade could be the most interesting one for you. This is two use cases for Seasonax. The one is analyzing single stocks. The second is finding interesting trades right now for the S&P 500. And if you like the presentation so far, I would now go for questions which might came up, and I'm looking forward to your feedback. Manuel, did we have questions which I might address now?
You can check the question. We have some questions open. I'm just answering them as good as possible and as fast as possible. Some questions will need a little bit more detail, so I will just I will also write it to this person that I will get to them with a more detailed answer within the next couple of days.
Then maybe like one more information from my end. If you are using Seasonax, if you're finding issues within the application, if you have questions to whichever section within Seasonax, there's always a little button on the right-hand side which you can use, and it will send a message directly to our support team. Which means, Manuel, maybe you can turn off your microphone again. Sorry.
Oh, sorry.
If you, for example, are jumping into a single chart, you're marking an area and you have a question which comes up to your mind, and you would then contact our support, it would directly know where the question comes from and should be able to answer it pretty quickly. To remind you once more, this session was the first of that kind from Seasonax. We're trying to do that more often. And of course, we are living on your feedback. If you find something within the application which you are missing, please send it to support, because we have a development roadmap which is always updated. And we try to create a tool which helps you find the right seasonal opportunities for your trading. And we try to stay the best tool in that field. So feedback is necessary for us. And if you feel like using Seasonax in the near future, don't forget the coupon code, which is available until the end of this month. If you type in Seasonax 20 directly within your account, if you apply it directly and start paying for whichever description, oh, sorry about that. As you see, if you have the wrong coupon code, it wouldn't work. Then you can apply it. Feel free to use it. Feel free to use the free 30 days trial. I hope there was lots of new input for you as a user. And based on your feedback, the next webinar will probably take place in the next 2 months. So I'm looking forward to your feedback. Have a nice evening. And I hope there was a lot of information you found from the end of Seasonax. Thanks for joining. It was a pleasure. I'm looking forward to hear from you in the next days. Thank you.